Good afternoon, traders. This is Christian from Tribeca Trade Group, and today is the first of the month. So August, I was going to say August 1st. It's actually August 2nd. So it is the second of the month, but it is the first trading day of the month. And not the usual of what we normally see on the first day of the month, first trading day of the month. The pattern has been, as of late, is kind of a little bit of a rough end of the month or final day of the trading month, and then for whatever reason, they like to sell, the last trading day of the month and then buy a little bit on the first trading day of the month. But I think this was actually what we saw back on July 1st, too. It was kind of out of that pattern, too. So let me just I'll bring up the performance of what SPY did on the first of the month. Let's see. Yeah, we were up about 0.5%. We were a little bit more than 0.5%. So, and then we had a little bit of follow through on the second of the month too. So that's what we had for July. And by the way, risk disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through here is for education purposes only. Also, if the screen is a little bit blurry, just give it a little bit more time. YouTube does take a while to render their high def version of the video. So if you are new to these videos, I usually spend about 5 or so minutes talking about the bigger picture, what we kind of saw for the day, and then we'll towards the end of the video we'll talk about some single name stocks that I thought were acting a little bit better, and had some momentum to them, and we'll kind of we'll go over those in a little bit more detail. So let's get to that price action for the day. Well, it's we've got a couple Fed speakers that are kind of rocking the boat a little bit. It's kind of funny because last week we had FOMC, and that kind of went out with there was no major volatility. It was almost too easy of a day, a little bit less than what we normally see on a Fed day in terms of volatility. But now, and that was Powell. Now you have every other Fed governor that's going to come out and talk about their opinion on what should happen in terms of tapering and raising interest rates. So that's almost worse than the Fed meeting was. And that's going to be, this week is going to be riddled by that. There's going to be a lot of Fed speakers. I'll tell you, I'm very opinionated on this subject. We were just talking about this in the Tribeca Trade Group trading room, and my opinion is, because everybody seems to be in the camp of tapering, bad news and so on and so forth. I view it to be actually good news when they announce the tapering. So let me explain why. So there will probably, whenever they announce this tapering of the balance sheet and tapering of the bond purchases, there will probably be a knee-jerk reaction, right? There will be some initial shock. Again, I'm just guessing, right? But you kind of want to plan this out or kind of think this out, because eventually this should be happening. And then I think depending on how they market it to, how they communicate what they're doing, then it might actually be a positive thing. Like if they come out and they announce a formal schedule and they take some. So why that's a good thing is because the market doesn't really like uncertainty. And every time we go into one of these Fed meetings, we don't know what they're going to do. So if you have some uncertainty, and as long as they don't announce anything drastic, but my guess is they're going to be very gentle with taking this tapering away, then I think having that plan will be actually a good thing. Now, it could go, that again, I'm being a little bit positive. If you remember what happened a few years ago when Yellen was Fed chair, it was good and bad. They waited, in my opinion, and I'm going to be a little bit, I'm going to complain here a little bit, or I'm going to criticize. But I remember when they were debating whether or not to start raising interest rates. Again, when Yellen was in command, they went through a period of should we not? We're thinking about it, but we're going to wait a little bit longer. And once they finally started to do it, they went too quick and they went too much, and they ended up spooking the market, and they had to dial it down. And I said this, so this isn't so much hindsight 2020. I said this at the time. I said, hey, when the interest rates are at 0%, and when you're talking about doing a quarter of a quarter of a point, 25 basis points hike, when the interest rates are at 3%, a quarter of a point is not that big of a deal. But when you're at zero, and when you start moving from 25 basis points to 50, up to, let's say, 1%, it is a little bit of a shock to the system. Even though it's still a very low rate. If you come out and you say, hey, we're going to do 10. So again, this is back when Yellen was there. If they would have come out pretty early on and said, hey, we're going to do 10 basis points every 3 months, right? Or every 2 months, they would have got to where they needed to be, and it would have been much gradual, and they would have signaled to the market. Now, again, they could have left the disclaimer and said, hey, we will dial back to 10 basis points if we see that something different going on in the economy. But I just thought there was a better way to do what they were doing, back a few years ago when Yellen was there. They could have done it a much different approach. So moving along to what's going to happen with tapering, it all depends on how they communicate it and what their how they schedule this tapering, right? If they do it on a gentle, systematic basis, I think things are going to be fine. If they draw the process out and say, hey, we're going to do this, and then we're going to reassess the next month, and then the next month, right? They're just adding more uncertainty. So we're going to have to see. And the only thing that we could really do is to kind of adjust, right? Because you could see, and the reason why I'm talking about this for 5 minutes in the video is because you could see what the price action was today. And, this wasn't, I don't know exactly what this move down was, but this, I think, was the second Fed speaker. And but the market looked weak from the open. So that's another thing, that I kind of stressed pre-market. And, every morning we have, we've got a pre-market review that starts at 9:05 every morning, sometimes a couple minutes late, as I started today. But I try to really kind of say, hey, this is what the market is doing. This is my plan for the day. And what my plan for the day was this morning was to sell into the strength and to realize that you can't chase. Right now, this market is much different than it was back in 2020. 2020. From a weekend, we would come in and the market might be up 40 basis points, and we would just continue to kind of grind higher throughout the session, and there might be some trading opportunities. Now, and this has kind of been the situation now a few times in the last couple months, when we start up 40 or 50 basis points, not up 1%, but the market just wants to sell it off, it seems like, the majority of times. And I know that day traders want to come in and they want to do things, but really sitting on your hands is kind of the best thing to do, and taking some profits. If you kind of, bought a little bit into Friday's weakness, that's what I try to do. I try to be a net seller in this market, because you cannot in this market right now. Chasing is a disaster. You're just going to get, cut up to pieces chasing in this market. Or a couple days last week, anything after, we had a constructive first hour a couple days last week, and then the market would just kind of fall apart. It would grind lower the rest of the session. So you got to be quick with what you're doing. And the other thing that I was pretty adamant about, and again, I'm not giving anybody advice, I'm just kind of telling people what I'm doing, but I said, hey, I like a couple things this morning, but I'm not going to put on anything in size. I'm going to be scaling in. So, if I want to purchase something in the first 10 minutes of the day, it's going to be small, and I'm going to leave myself plenty of room, because I certainly don't want to back myself into a corner, right? And we know over time too, one of the things that we try to touch upon too, if you're swing trading, the best time to add trades is the last hour, right? Not the beginning of the day. That's the worst time to be adding new swing trades. So I try my best to sit on my hands during, remember, we used to call it back in the day, the first hour of the trading day was the amateur hour, right? All the amateurs would come out and try to buy and so forth. You don't hear that term anymore, but back when I started working on Wall Street, that's what people used to tell me. The first hour is for amateurs. Then everybody kind of sits back and watches and does some things. But Yeah, you don't hear that expression anymore. I don't know why that went away, but I still feel that's the situation a lot of times. All right, so what did we get in terms of like the macro data? IWM was all over the place. IWM was leading the day. That sold off the most. The Qs and the SPY went down 60 basis points. But yeah, the small caps were the ones that went down the much. And then there's been this bid in Treasury. So another update for Treasuries, up 0.75%. I don't know 100%, what's going on here in bonds, other than it's a risk-off move, number one, and I think it has to do with positioning. There's probably a lot of hedge funds that initially thought that rates were going to keep going higher, right? And they're kind of caught. I think anyway, if we look at what's going on here on a day-to-day basis, it just seems like the bonds are going up with a lot more ease than the other way around right now. So, so that's a little bit good. That's decent for growth stocks. We started to see things like, in the beginning of the day, we were seeing that software names were down. Growth names were down, or the ARK fund was down, and those things came back, and they were actually leading for a little bit for the day. And I think the ARK ETF was still up about 1%. So I'm guessing part of that is because, again, I'm really coming up with trying to come up with some reasons for today's price action. But I think it was partially the move in bonds, right? It is a little bit better of an environment when yields continue to go lower, which is what we see going on in the TLT right now. Right, so this ARK Innovation ETF was up, and you can see it actually went up after the open too. Unlike most things that you could see that actually went down for the day. Right, and again, this was kind of got worse throughout the session. So Chinese internet names, they were your best performer. China was strong overnight. Here's what the price action was in the overnight market, which again, if you're looking for the China, internet names to be up, first thing I always check is what China did overnight. And the Shanghai was up 2.6% last night. The Hang Seng was up 1%. So we kind of felt like we were going to get a decent day in that group. Utilities were strong. The semis, even though they gave back some of those early gains, they were still up 0.75%. So let's look at a few charts. Well, I guess the name of the day was probably Square. Crazy reaction to this. I'll be the first one to say I was not expecting this. We talked about this in the pre-market session. I was completely wrong. I'm long this name along with PayPal in the TTG Trend portfolio, which is a longer, not long dated or swing trades, but I'm following the trend, and I've been that way. It's a trend following portfolio. So I've been they're not long-term holds, but they'll be long-term holds if the trend stays. But anyway, I was like, geez, I might have to sell this thing. It sounds like this was a pretty bad deal. They paid up for this company, but the market liked it. And, it's one of those things like so I was wrong about this. I didn't think Square was going to go up today. And, I know number one to follow the price action, and that's basically was my conclusion. I'm like, well, let's see what it does for the day. Let's see if it, if buyers step into this thing, and they certainly did. And you could see where it is now. It actually, got very close to the all-time high. It stalled out a little bit, but closed at 272. So, we'll watch this one for now. It lives to fight another day because like I said, I was almost going to take this thing out at in the 3 o'clock window that I use for M1 Finance to close out of positions. But so be it. Worked pretty well. The second stock to talk about today was Tesla. Right. So I came in position long. All right. So I came in positioned long. I had started a position last week in Tesla via a call spread. Call spread worked wonderfully. And what I did was I started to buy some calls on Friday, and I was in some short-dated calls. I was in this week's expiry, and I didn't like how they were moving too quickly. I don't think right now it's the right environment to be adding heavy short-term calls. The market is just too dicey right now. So what I did was I rolled it into some stock, and was initially down in the position, and so this worked very well. I took my first target, right? So I use the market webs a lot, right, which is our own proprietary system on this first VPOC that was taken out, Virgin Point of Control, right? Because it's got overhead supply, so these Virgin Point of Controls tell you where there's overhead supply. Right, so they're really great for letting you know where these things are, right? So I took a healthy target pre-market, took a little bit more off, and ultimately, we'll see if we could take out this VPOC up here, which is right around 733. So we just barely missed it. I had a limit order out there for it, but it did not get filled. So nevertheless, that was a nice winning trade. And then, of course, the semis were, this is one of the groups that we highlighted. And, so here's exactly what I said this morning. This was at 9:34 this morning. I said, we'll leg into, because I hate buying in the first 5 minutes, and we'll kind of go from there. And I said later in the day, I said, well, we'll see how this SMH trade starts to look at the end of the day, and that will judge whether or not I add to it. And note, I did not add to it. Right, so we'll just kind of see how it goes. The reason why I decided to do the ETF is because I kind of want to own the whole group. Right, I've been in this Applied Materials a couple times, and it's failed on me. Right, so I don't, because I like this setup in Applied Materials. I like the setup in Lam Research, but I've seen too many of these things just stall out, and it looks like they kind of did it today again. Like Lam Research was on my list, on my watch list for today, and look at what it did, 660, and then all the way back down to what, 641. So I would rather not mess with some of these names. That's a difficult name to trade. $641 stock. The options are a little bit rough in this one too. So what I decided to do was just use the whole ETF, and look, I just bought stock. I'm not even messing with the options here. If I'm in the options, right, like I was, even though I was all the way out in October in Goldman, I'm getting out of these things as quick as possible, right, because the market is just too volatile, right, and we're seeing too much of this. Like Goldman started to get going, right. So look at this chart, by the way, right, intraday. Candle looks beautiful. Got all the way up to 386, right? But they're just giving it back. There's too many of these charts that I'm seeing that are doing this. So as soon as I see this, a name up 2 or 3%, I'm selling, right? Even though this is where they're buying calls. I made a comment about this earlier. And again, I try to point this stuff out so people don't get sucked into this. Same thing with Tesla. But Goldman, yeah, they were buying calls at the high of the day. That's just wrong. I mean, Tesla, in fairness, they were positioning in this, that actually helped me get into it last week. I kept on seeing buying and buying and buying. But there was more buying today. But you have to be careful, right? You have to make your own judgment. Blindly following this option activity will equate to major losses for you. I could just tell you that from experience, right? And I know how the game works. I talk about it all the time. You see a whole bunch of people tweet about stuff when it works. When it doesn't work, you never hear anybody talk about it again, right? So you go back, look at the people who are tweeting about option flow. They will never go back to the ones that they mentioned there was a call buyer in something and it doesn't work, right? And there's more of those that happen than the ones that do. That you see people doing the victory laps on. All right, so I rolled this into, so I took off the volatile stock position, sorry, the volatile option position, and I rolled it into stock. I took a look at it at the end of the day, and I said, this is not what I wanted to happen for Goldman, and I'm out. Right, so this might be how this month works. We just don't know. That we might see a lot of these, green looking candles in the beginning of the day and they turn red at the end of the day. So, I talked a little bit about this from in the weekend video too, in the weekend member videos. Being nimble not racking up a lot of positions in this market, and taking off ones that you think are not working. Deere was another one. Right, looked great in the beginning of the day. Looked like it was heading towards that 371 VPOC, and it's just I forced a target in this on Friday, and I could have taken one again. This one I got a little bit greedy because I could have made some more money on this morning, but I just thought we were headed to this 371 level. So it seems like anytime I say try to stretch this into a nice winner, it reverses and it goes the other way on me. So that's just what I'm seeing in terms of trading. A couple other names, because again, like I'm just not taking a lot of, even though I see like a nice signal, I'm really being picky right now because you can't overtrade in this market. It's just too dicey. Upstart, real nice move here and out of this. I've been in this thing. I've tried a trade in this thing a couple times. It has not really worked for me other than maybe taking a quick target and then the position goes red. So I'm like, screw it. I'm staying out of this one. It still has some work to do to get over this previous peak, but it looks pretty good. And look at the value area for the month, right? When the value area is this tight, right? And again, look at the market profile, right? That's where this value area is derived from. When these things are super tight, a big move could be coming. So this thing could be rallying into earnings. All right, so that's another name. Of course, AMD, another strong day after earnings. We talked about how this name could really get interesting. This one we have seen just about every day, the call buying, momentum call buying in this one. All right, so we talked about a couple names. What name did I want to? What was the last thing I was going to talk about? Now I'm drawing a blank for the day. Oh, another name that we saw some option activity in. But I'll tell you what, like this is where it gets interesting, right? So somebody's positioning in this TDC. Which I like the chart in this TDC. But I'll show you the option activity first. Right, so the August 55 calls. All right, 9,000 contracts. So a lot of volume on this line for about $1.30. But keep in mind, what's the 55 strike? How far is that away? Well, that's $5 on a $50 stock, right? So that's 10% higher. It's going to need a decent move, right? So 10% is a decent move, but keep in mind this name reports earnings, right? So this reports earnings on Thursday, right? So look at what the name does on earnings. Sorry, wrong screen. All right, so here's what the name does on earnings. Again, the most important column is this one. This is the price reaction after earnings, right? So this is a whopper of a mover. Now, so you kind of have to think about it in terms of this, right? So, this is what I always try to do when I see option activity. What are they thinking here? Well, the chart's pretty constructive, right? 55 is up here. Again, it's a decent move. It's a 10% move, but look at what this thing does historically. Right? It could definitely move more than that. So someone's taking a shot at a home run here. Right? And I think that's a decent way to do it if you wanted to take that kind of risk. But you have to be comfortable with taking that kind of risk. Spending $1.30 on 55 calls for August, they're going to have to crush earnings. If they don't, right? And if the stock just goes flat, you lose the $1.30, right? You're out $1.30, right? So people don't talk about that when they talk about option risk, right? They're always like when they on TV, when they mention this stuff, they try to get everybody all excited that there's all these calls and they're anticipating a big move, right? But they don't talk about the risk, right? There's a good chance that you spend $1.30, $1.40 for that option and it goes to zero. Right? So that should go into your position size of how much you want to risk, right? Anything less than 60 days in options is extremely risky. Most of those options expire worthless, right? Now, a lot of them are closed out before they expire worthless, but there is an awful lot of short-term options that expire worthless. So you have to say to yourself, hey, I'm going to take a shot at this name doing something really crazy on earnings. And if it doesn't do anything crazy, you're going to lose the whole premium, right? Or you're going to lose 80% of the premium. Now, if you're okay with that, right, then the next step is, right, if you want to take that risk that, hey, they might do something really crazy on earnings, because they generally do move a lot. But, you know, it doesn't mean just straight up. Last quarter they went down 16%, right? So if it goes down 16% or if it goes flat, then you lose that premium. So that should go into your position size. For example, like let's just use round numbers, right? If the calls went down to like $1.25, right? Are you willing to, you know, how much are you willing to lose on this trade? $500, $1,000? If it's $500, then you buy 4 contracts, right? If that's all that you're willing to risk, right? Because if you're willing to lose $1,000, right, then you buy 8 contracts. But again, you have to be comfortable with lighting that money on fire if it doesn't have a home run of a move, right? You know, going up 10% and, you know, continuing to go higher. Actually, you need more than 10%, right? You need to, because you need to recoup the cost of the calls, which is somewhere around $1.25 to $1.40. So you're going to need the stock to go up all the way up here. So it's kind of a, you know, it's a decent bet. I do like the chart. The other thing that could happen here is that the stock could run into the earnings report, and then you don't have to hold it. You don't have to mess with the unknown event. So that's another way to play it. You know, if you buy the calls for like $1.30, $1.40, maybe you can get out of them for like $1.80 if the stock makes a move into the earnings report. That's one way to play it as well. But you have to realize that may not happen. It hasn't broken above the recent range. The other way, of course, to play it is just to trade stock. And if it runs, you can make some money on the stock. And if not, then you take the stock off before earnings, because you probably don't want that type of risk that the stock moves that way. And then you could decide you could maybe substitute into the calls. All right. But that's how we think about option activity, right? We don't do this nonsense that says, oh, there's 8,000 calls that went up on the tape. Wow, I'm in these and I'm going to be in these for a week, right? Well, what's the probability that that trade goes to zero because it has earnings? And where does it need to go for you to actually make money in the calls? Can you actually make the money in the calls before the earnings date? Right? So these are a lot of things to think about, and you know, this is why option trading, especially around earnings, is very, very tricky. All right, there's a lot more people that make losses on these things than actually make gains. But you know, there's certainly names. I mean, you can go through last week's names, right? There's a handful of them that acted very well post earnings, right? But there's a lot of them that didn't too. So it's tough. It's really tough. It's a tough game to play around earnings. All right, guys, that's it for tonight's video. But I wanted to kind of clarify and provide some color to what I saw, you know, on the tape today, as well as, you know, give you some thoughts behind some option flow. All right, thanks guys for watching. Have a great night. See you tomorrow.